Welcome back, my friends. The news today is that Tesla is at a critical point in its history. Tesla wins first U.S. autopilot trial involving fatal crash. Tesla stock recently closed below $200, hits 5-month low as a tough October rolls comes to a close. Its Giga Berlin expansion set to kick off in early 2024, amid controversy. A key test for EV sales and the adoption curve is coming. But before we get into that, please hit the like button. Please leave us a comment below. We would love to hear from you. Please hit the subscribe button and the bell icon so that you are notified of upcoming videos. And before we continue, a word from the sponsor of this video. Today's sponsor is ProWorldNet.com. ProWorldNet.com is a job website specifically dedicated to licensed professions. Doctors, including any type of specialty. Nurses, and that includes all grades of nurses. Lawyers, regardless of area of legal focus. Teachers and professors, from kindergarten through graduate school, as well as any kind of job that requires a government license or certification. And ProWorld.net also includes short-term gig-type jobs as well. So be sure to check out ProWorldNet.com if you are looking for a job or an employee. Tesla on Tuesday won the first U.S. trial over allegations that its autopilot driver assistant feature led to a death, a major victory for the automaker as it faces several other similar lawsuits across the country. The jury verdict represents Tesla's second big win this year, in which juries have declined to find that its software was defective. Tesla has been testing and rolling out its autopilot and more advanced full self-driving FSD system, which Chief Executive Elon Musk has touted as crucial to his company's future, but which has drawn regulatory and legal scrutiny. The case that concluded on Tuesday in a California state court was filed by 2 passengers in a 2019 crash, who accused the company of knowing autopilot was defective when it sold the car. Tesla argued human error caused the crash. The 12-member jury announced they found the vehicle did not have a manufacturing defect. The verdict came on the 4th day of deliberations, and the vote was 9-3. Representatives for Tesla and the plaintiffs did not immediately comment on the verdict. The civil lawsuit filed in Riverside County Superior Court alleged the autopilot system caused owner Micah Lee's Model 3 to suddenly veer off a highway east of Los Angeles at 65 miles per hour, 105 km per hour, strike a palm tree and burst into flames, all in the span of seconds. The 2019 crash killed Lee and seriously injured his 2 passengers, including a then 8-year-old boy who was disemboweled, court documents show. The trial involved gruesome testimony about the passengers' injuries, and the plaintiffs asked the jury for $400 million plus punitive damages. Tesla denied liability, saying Lee consumed alcohol before getting behind the wheel. The electric vehicle maker also argued it was unclear whether autopilot was engaged at the time of the crash. Matthew Wansley, a former general counsel of Nutonomy, an automated driving startup and associate professor at Cardozo School of Law, said the steering issues in this case differ from those in other cases against Tesla. In those lawsuits, plaintiffs allege autopilot is defectively designed, leading drivers to misuse the system. The jury in Riverside, however, was only asked to evaluate whether a manufacturing defect impacted the steering. "If I were a juror, I would find this confusing," Wansley said. During the trial in Riverside, an attorney for the plaintiffs showed jurors a 2017 internal Tesla safety analysis identifying incorrect steering command as a defect, involving an excessive steering wheel angle. A Tesla lawyer said the safety analysis did not identify a defect, but rather was intended to help the company address any issue that could theoretically arise with the vehicle. The automaker subsequently engineered a system that prevents autopilot from executing the turn, which caused the crash. Tesla won an earlier trial in Los Angeles in April, with a strategy of saying that it tells drivers that its technology requires human monitoring. Despite the autopilot and full self-driving names, that case was about an accident where a Model S swerved into the curb and injured its driver, and jurors told Reuters after the verdict that they believed Tesla warned drivers about its system, and driver distraction was to blame. Tesla TSLA stock dropped 4.8% on Monday, dropping below $200 and hitting lows not seen since late May, despite a broader market rally and rebound in beaten-down tech. 2 pieces of news were weighing on Tesla stock. The first is from Tesla battery supplier Panasonic, which cut automotive battery production in Japan in its September quarter, and guided its annual profit forecast down by 15%, ostensibly from the effects of a global slowdown in EV sales. Panasonic makes battery cells for EVs for automakers across the globe. But in the US, the Japanese company partners with Tesla to produce cells at the Nevada Gigafactory. That being said, the company said it lowered production in Japan and for global customers, not for North American operations. Panasonic did drop supply of its 1865 EV batteries to Tesla during Q2. These older batteries are still used in Tesla Model S and Model X vehicles, which don't qualify for Inflation Reduction Act, IRA, EV tax credits. The IRA has a price ceiling up to $80,000, and since the high-end models exceed that level, demand decreased. Panasonic CFO Hirokazu Umeda said on Monday. The second piece of potentially bad news for Tesla came when chipmaker ON Semiconductor reported weaker than expected profit and revenue guidance due to softening sales. ON Semiconductor makes silicon carbide chips, which Tesla has been using in the company's EV powertrain and other key components. Silicon carbide chips generally withstand more heat, are more energy efficient, and have a longer life expectancy than standard silicon chips. Investors may be eyeing a drop in silicon carbide demand as a leading indicator in softness for EV sales, most notably Tesla's. ON sells silicon carbide chips to EV makers and cited increased risk to automotive demand due to high interest rates, Black wrote on X, formerly Twitter, around midday on Monday. Tesla shares declined around 5% to close at $197.36 on Monday after updates from Panasonic, its long-standing partner and battery cell supplier, stoked concerns about sluggish demand for electric vehicles once again. On an October 18 earnings call for Tesla, CEO Elon Musk said Tesla was focusing on cost-cutting and keeping prices as low as possible for car buyers in the face of higher interest rates. Tesla short sellers have made more than $3 billion since the company's third-quarter earnings call, according to data from Ortex. Shares in electric vehicle maker Tesla declined nearly 5% on Monday, following news that Panasonic, a longtime partner and supplier to the EV maker, had reduced battery cell production in Japan during the period ending September 2023. The update stoked investor concerns about softening demand for EVs, especially for higher-priced EVs that may not qualify for tax breaks or other incentives from government programs in and beyond the U.S. Panasonic cells, have been used in Tesla's older and higher-priced Model X SUVs and Model S sedans. During Tesla's third-quarter earnings call October 18, CEO Elon Musk had cautioned shareholders that interest rates were putting pressure on the company to keep the price of its EVs lower and could hamper consumers' ability to buy or lease EVs moving forward. Musk also repeatedly said that Tesla was facing serious challenges with the start of production of its long-awaited Cybertruck. Tesla CEO Elon Musk has been promoting the company's long-delayed sci-fi-inspired Cybertruck on social media this week. However, the electric vehicle maker still hasn't issued final pricing and specs for the trapezoidal pickup, which it first unveiled in November 2019, and a company-wide email sent by Elon Musk implies he's worried about precision in manufacturing the truck because its straight edges mean variations show up like a sore thumb. In its second-quarter financial filing with the U.S. Securities and Exchange Commission, Tesla said its factory in Austin, Texas was working on tooling for the Cybertruck, and production status was not yet active. The company also said in a shareholder deck that it was working on equipment installation for Cybertruck production, which remains on track for initial deliveries this year. The company has not said when it expects to be able to mass produce the vehicle. On Wednesday, Musk shared a post on X, formerly Twitter, with an image of the Cybertruck saying, "Just drove the production candidate Cybertruck at Tesla Giga Texas." In automotive manufacturing, a candidate is an early model of a vehicle that the manufacturer uses to gauge the quality of its production systems and vehicle assembly lines. A Tesla promoter and fan pressed Musk for more details on the social platform Wednesday, writing in a post, "Enough with the hype, let's get down to business. Please announce the specs, pricing, and new estimated delivery event date." The Tesla CEO, who also owns and runs X after a $44 billion buyout last year, replied, "When we are ready to do so, we will. While I think it is our best product ever, it is an extremely difficult product to build. We are in uncharted territory, because it is not like anything else." Musk also sent an email to everybody at Tesla on Wednesday about the Cybertruck and the challenges of producing the vehicle. Tesla employees shared a copy of the email with CNBC and asked to remain unnamed since they were not authorized to speak with press about internal matters. What Musk said in the email implies that Tesla is still struggling with Cybertruck quality. Shares of Tesla were dipping slightly following Musk's Cybertruck comments and the email. Tesla cut the price of some Model 3 and Model Y versions in the U.S. after the company reported third-quarter deliveries that missed market expectations. The starting price for the Model 3 is listed at $38,990 on Tesla's website, down from $40,240 previously. The long-range Model 3 fell from $47,240 to $45,990, and the Model 3 Performance fell to $50,990 from $53,240. Tesla's Model Y Performance Sports Utility Vehicle now starts at $52,490, down from a previous price of $54,490. Beginning at the end of last year, Tesla began cutting the prices of its cars across the world in a bid to stoke demand amid concerns over slowing consumer spending in markets like the US and China, and as competition in the electric vehicle space ramped up. But the latest round of price cuts comes just days after Tesla reported third-quarter deliveries of 435,059 vehicles, missing analyst expectations and marking a decline from the previous quarter. Tesla has said that it has over 2 million orders for the Cybertruck. So demand does not seem to be an issue, as it seems to be becoming for Tesla's older models. Again, Tesla is facing technical and manufacturing challenges when it comes to manufacturing a new vehicle. And even though Tesla's Model Y and Model 3 are very popular and have reached full-scale production, profitability of those older models is in decline because of the EV price war that began this year. Tesla desperately needs a high-profit vehicle that can bring bigger profits for a couple of years. But no vehicle can be profitable if it takes too long to build. Tesla has revealed its aspirations to commence its Giga Berlin expansion project in the first half of 2024. This announcement comes against the backdrop of ongoing public debates surrounding the project's scope and impact. The expansion initiative aims to modernize the existing factory structure, establish a water recycling facility, and construct a second production building and a battery recycling plant in the coming years. However, the project hasn't been immune to controversy. Over 1,000 objections have been raised against Tesla's expansion plans, with significant concerns centering on potential environmental consequences and the plant's water consumption. The Strausberg-Erkner Water Association has been particularly vocal in opposing Tesla's expansion, citing its inability to meet the increased water demand for expanded production. Environmental organizations, including the Green League, NABU, and the Association for Nature and Landscape, have expressed concerns about the transparency and consistency of the discussion process. They've criticized certain document redactions and subsequent alterations after initial publication, raising questions about the process's integrity. Despite these objections, the State Office for the Environment has affirmed the legality of Tesla's updates to application documents, provided they don't constitute an entirely new project. German Chancellor Olaf Scholz has lent his support to Tesla's expansion, emphasizing the significance of retaining companies like Tesla to strengthen the country's economy. He underscored the need to balance environmental considerations with economic prosperity. As outlined in plans released last year, the expansion is set to boost Giga Berlin's production capacity from 500,000 to over 1,000 vehicles annually, and increase its battery production capacity from 50 GWh to 100 GWh per year. According to a report by CNN, the shift to electric vehicles poses a significant threat to auto workers' jobs. IG Metall, the German union for most of the nation's auto workers, estimates that 75,000 German jobs building engines and transmissions will be eliminated by 2030. The German automotive labor unions have been fearing the electric revolution for a while now, claiming that it could lead to job losses. In addition, electric vehicle production requires 30% fewer workers than traditional combustion engine vehicles. As a result, a non-unionized Tesla weakens IG Metall's bargaining power in the overall automotive sector in Germany due to fewer union members and a higher labor supply. German labor leaders have insisted that automakers must build their own electric car components at a large scale, rather than outsource the non-specialized work to save German jobs. It is worth noting that these threats are not unique to Germany. Many automakers worldwide are struggling to make profits on their electric vehicle businesses due to high costs associated with research and development and battery production. Tesla recently cut the price of some Model 3 and Model Y versions in the US after the company reported third-quarter deliveries that missed market expectations. Beginning at the end of last year, Tesla began cutting the prices of its cars across the world in a bid to stoke demand amid concerns over slowing consumer spending in markets like the US and China, and as competition in the electric vehicle space ramped up. But some observers think that cracks are starting to show in the electric vehicle market. Electric vehicle demand growth is slowing. According to a report by The Street, Ford is losing nearly $60,000 for every electric vehicle sold. In the first quarter of 2023, Ford's electric vehicle division, Ford Model E, recorded a loss before interest and taxes of $700 million. In the same quarter, Ford delivered only 12,000 electric vehicles, which means that the carmaker lost 58 to 333 for each clean car sold during this period. Ford's electric vehicle business will lose about $3 billion this year alone. It is worth noting that these losses are not unique to Ford. Many automakers are struggling to make profits on their electric vehicle businesses due to high costs associated with research and development and battery production. General Motors, GM, has pledged to stop making gasoline-powered passenger cars, vans, and sport utility vehicles by 2035, aiming to produce only electric-powered passenger cars and SUVs. However, this pledge is not a commitment but an aspiration. GM has also announced that it will offer 30 all-electric models globally by mid-decade, and 40% of the company's U.S. models offered will be battery electric vehicles by the end of 2025. Now it seems that General Motors is backing off on its electric vehicle commitments. Toyota, for its part, has long been skeptical that the world will convert to electric vehicles quickly, and Toyota has been criticized for being slow the electric vehicle market. What do you think? Please hit the like button. Please leave us a comment below. We would love to hear from you. Please hit the subscribe button and the bell icon so that you are notified of upcoming videos. Please share this video on social media. Thank you for watching.